Can I ask a quick question?
Yes, ma'am.
Where can I find the back office where you could do the exercises?
Okay. Let's see if we can get to that later on in the session.
Okay, cool. Thank you.
All right. All right. Good morning, good afternoon, good evening, everybody. Welcome to the Inner Circle Live pre-New York session. I'm your host for today's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us as we take a look at the technicals and the fundamentals, which is set up to be a very big day, right? We want to see what we could take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If everybody can hear me loud and clear, do me a huge favor. Let me know that chat is working this morning. Drop me a 1 in the chat. Let me know we are all set and ready to go. All right. Appreciate it. Mr. Carthage, good morning, sir. How are you?
Good morning, bro. I am doing well, man. Glad to be here. How are you?
Oh, man. Definitely glad to be here. It's going to be a great day. Great day. I'm looking forward to it. Yeah. So let's take a look at the fundamentals. First, let me just skip over to today, right? So we noticed that besides the two setups that we put the setups in the newsletter, right? This weekend, the pound NZD and the pound CAD. Now, we haven't put too much out there simply because the markets is kind of at a pause. We wanted to be cautious coming out of the weekend. We covered a lot of stuff on Saturday doing the weekly ritual. So if you haven't had a chance to be a part of those, make sure that you join us on Saturday, 7 a.m. Eastern Standard Time as we get prepared for the week. But we know, right, that we had a bank fail causing, right, a lot of caution out there in the markets. And then we also have the big report today at 8:30 a.m., the CPI report, right, which, hold on one second. Let me zoom this in. The CPI report, which tracks, right, key data point for inflation, right? So those of you who may not know, consumer prices account for a majority of overall inflation. Inflation is important in currency valuation because rising prices lead to the central bank to raise interest rates out of respect for their inflation containment mandate. And we know they like to have inflation down around between 2.5%, 3%, preferably 2 is the main target. And we know that we are way above that right now. So that is very, 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 very important. And then so that's month over month, year over year, due out today. But then we know that the Fed really takes a look at the core CPI. Okay. Difference, look, food and energy prices account for about a quarter of CPI, but they tend to be very volatile and distort the underlying trend. The FOMC usually pays more attention to the core data. So do traders, right, Ryan? So when Chairman Powell last week was in front of Congress testifying, and they jumped on him about energy, right? And hey, wouldn't it make a big difference if the Biden administration changed their tone and their position on energy policy? And what did he come through and tell them, Chairman Powell? He said, well, we tend to look at core CPI, which does not take into account energy prices, right? And then you got crickets from the congressman asking the questions. So yeah, this is very, very important. They really look at core CPI. Can everybody hear me loud and clear? Or did my headset disconnect?
No, we're here good, bro.
Hear you good? Okay, so I don't know what that was about. All right, so the CPI is going to be very, very important. It's important for every central bank around the world, right? As they all track CPI data, but the United States is the world's reserve currency. So, hey, right now, as the United States goes, so does the rest of the world. So this is going to be very, 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 very important. We got the claimant count here out of the UK. Wage growth slows as expected. Okay, so total pay growth in the UK eased to 5.7% year on year in November through January, the smallest increase in since July, suggesting the labor market might start to cool following the unprecedented series of Bank of England rate hikes over the past year. Right, so you always hear the Fed, these Fed representatives, right, central bankers, I should say, talking globally, saying that there are lagging effects to interest rate hikes, right? And they always try to toe the line to find a fine balance and not get too aggressive with hikes, because they know it's a lagging effect. So you don't want to go too far too fast and shock the market and drive it into a deep recession, right? Despite some of the rhetoric that you're hearing, that they love to do this, or it's their main intention and focus to really, it's something that's part of the game when you talk about economic cycles, that you have to get the inflation genie back into the bottle, and one of the tools that they use are rate hikes, right? Are rate hikes. So now we have a bank that has failed, and you hear the rhetoric saying the central bank has finally broke something. All right, so we have this Silicon Valley Bank that failed. Now you've got a lot of effort, right, to control the narrative so that the sentiment doesn't shift, and you start getting a large run on banks, right? And it seems like as of right now they've got it under control with the way the authorities have stepped in, and to make sure that all of their depositors get paid out. But it's all about sentiment, is how people feel that drives the behavior and the actions, right? So we are in some pretty volatile times right now, and you see that happening in the stock market. So you can see here the European stocks try to stabilize after a 2-day sell-off. Here in the United States, the inflation rate is expected to fall to 6%. Now, we are now going from what was to be a high probability that the Fed is going to hike rates by 50 basis points to now is back to potentially 25 basis points. And maybe even, they come to the conclusion that they're not even going to hike rates at all at their next meeting, okay, which is in March. So because of the bank failure. So it is going to be interesting moving forward. Ryan, what have you read on the situation?
Similar. There was actually another bank that was taken over by the government yesterday. So it was the second bank that this occurred with. It was Signature Bank.
Okay.
Yeah. But it's part of that run on banks that you were talking about, and it'll be interesting to see. But at the end of the day, it's the Fed has to go through this process in order to get things in order, like Powell has been saying, regardless of what Wall Street wants him to do for their best interest. So something that has to happen in order for us to be able to function and continue moving in a somewhat of a good fashion. So
yeah, for sure. And we can see that as a result too, right? That the global bond rally softens a bit, right, in regards to that yield came down, right? So if we go over to trading view, and what is this? We look at, hold on 1 second. We come over, we take a look at the charts. Right, you can see a huge correction, right? So we got up around that. Remember, we were watching that 4% level, right? And then look at the drop off in the correction. Okay, huge drop off in the correction. You've got a bank that failed, and now the anticipation, right? It was red hot before. The dollar, everybody was pricing in, hey, 50 basis points coming, 50 basis points coming based on the Fed's last data prior to the banks failing. Everybody was saying, hey, 50 basis points as opposed to 25. You had a rush, right? Nice bond rally. Now look at the correction to the downside. And if you come over and you take a look at the DXY, you can see where we've gotten, right, that correction to the downside, right, on the dollar. Okay. So it all flows together, right? That's why we pay attention to all of it. So we found support here right at the 61.8 on the dollar. I'm not really lending too much credibility to that price action right now because we have this CPI data that's due out here at 8:30. There will be, Carolyn, there will be a panic where people start taking their money out of the bank, right? That's what we're trying to prevent, right? That's what everybody's trying to prevent that, right? That run on the banks, right? So Christina said, yep, yes, there was more than one bank. There was, right? So yes.
I got a question.
Sure.
Since those banks were they issued bonds, how would they be able to cover the next sell of bonds?
The feds are stepping in. I forget what the term that they called it. I have to look it up again, but I was listening to it yesterday. Bloomberg surveillance. So they've got a whole game plan where they're giving them pretty much a year extension. They're backing them. From what I understand, if I'm understanding it correctly. Right. So they're getting support. Right. So pretty much you messed up in regards to your bond portfolios, right? So a lot of people for SVP, they're blaming the CEO. That's where the blame's going to go to, right? Automatically. And that it was poorly managed. So that's why they're saying like, hey, this is not going to be the trend. It doesn't look like it did in the past when we had these situations and you have these major runs on banks. It's just, hey, these few smaller banks, badly leveraged portfolios, we're in control of it, right? Let's keep it moving, right? Let's not develop that sentiment where that fear and panic kicks in, and then you start getting major runs on banks. So that's what they're trying to prevent right now. So the CPI data is going to be very, very important tomorrow. Everybody wants to see what that read is on inflation. You can see that U.S. inflation rate is expected to fall to 6%. Okay, because it's been falling, right? Slowing for an 8th straight month. Okay, so in key sectors, right, it's been falling. I know they pay a lot to service, a lot of attention to service sector. Lagging effects have been kicking in, right? So we'll continue to follow it, but you could just tell by the way the markets are moving that's what everybody is waiting on. Any good question? Any China, Russia loving this bet? It's a bet. Yeah, we're all connected, right? We're all connected. We import a lot from China. China needs the U.S. economy to be healthy, right? So as much as we hear, enemies, villain, we're all connected whether we like it or not, right? So we still have the world's largest economy. If you're an exporter, you want the United States to be in good shape, right? You want these other economies to be in good shape. Okay, you don't want to see the consumer and companies and corporations start to tighten their belt, right? Where you gonna export to? So, we'll see how it goes. Gold, right? So gold is a store of value, right? So if that panic sets in, people may move, money into gold, right? Kind of that safe haven effect. But gold's not going to yield you anything, right? There's no interest attached to gold, right? So it can play as that safe haven, right? Ryan, what article was that you were reading about the central banks? Buying a ton of gold.
Oh yeah. There's 4 countries that are trying to create a new currency, and they want to back it by gold. And that caused the United States, well, all central banks in the 3rd quarter of last year to buy what was it? 3rd quarter of last year, they bought 400 tons of gold, which is the most since the Nixon era. So 3rd quarter of 2022. So that's already occurred. So yeah, I can share that article.
Yeah, for sure. For sure. So yeah, when fear and panic kicks in, people to move when there's a lot of crazy volatility in the market. Hey, the stock market may not be that spot. If things are too volatile, it becomes too risky. So where can I park my money? Well, one of the places, right, where people have been parking their money is right in the US dollar, right? Full faith and credit of the United States government, world's largest economy, it's the world's reserve currency. Well, man, when we were looking at this here, so think about it. You're an investor. You're an investor. If I can lock in 4%, right? If I can get 4% over 10 years on my money, right? The stock market is too risky and volatile. I think I'll take that. Right? If I'm sitting up there, got millions of dollars, hundreds of thousands of dollars, I think I'm gonna shift my portfolio a little bit into bonds, right? A more secure asset. And I can lock in that 4%. I'll lock that in, right? Especially if I'm not getting that return on the market right now. And to try to get that return may be too risky with the volatility. So I'm gonna shift, right? I'm gonna shift a little bit. So that's why we believe in following these ABCD ways, because all of these things, right? This price action, this movement, right? This movement, this reallocation of money, right? This is what creates those waves. So yeah. So gold, store of value, doesn't really, just like how the yen can act as a safe haven, right? What kind of yield are you getting from the yen when you're running a negative rate? Right? You're not getting much of a return, but when you look at the Japanese economy, look at Japan overall, right? It could be a safe store. Same thing with the Swiss franc, right? That's why at times they act as safe havens. But so far, right, the dollar has been king because of the yield that you can get, right, from government bonds. Okay, and in order to to purchase those U.S. bonds, you have to do it in U.S. dollars, right, which tends to lend strength to the dollar, which is why you saw, right, that price action when the dollar exploded to the upside, and now we have that correction. So just the normal everyday flows of the Forex market. All right. Any other questions fundamentally? It's a good discussion to have this morning ahead of the reports, right? Because the market is pretty much on pause, but we will go and take a look at, nope, okay. So we will go and take a look at the setups. I know the pound NZD played out pretty good. I think that pound CAD is still running to the upside. So let's take a look at the pound NZD, and we can see that we did get the correction to the downside. Right? So we came out of that zone, we consolidated a bit, we pushed up, hit that daily resistance at 196.82, and we dropped through 2 TP levels, TP2, about 246 pips, right? So it's a pretty good day at the office, and that one might, who knows with the news coming out, which it may turn over some more. But that was a really good play. Was anybody able to take advantage of that move to the downside?
Nope.
I didn't. I missed that one, bro.
No. All righty. And then the pound CAD. oh, this one's turning back over a bit. I thought that was gonna make the run and it might miss and go straight to the D, but it didn't. So it's turned over, right? It's back in that 80-20 zone, right? Still in our little area here. So we'll see. The news has the ability to wreck shop on everything. So if you're in this one right now, right, depending on where you're playing your stop, keeping it wide at the D extension, right? This is still an active trade coming out of the weekend, right? So we pushed up a little bit beyond that 127 zone, and now it looks like it's turning over, but we'll see what happens at 8:30. All right, with the CPI data. But that's where we are right now on that position. Any questions on that pound CAD 80-20 play?
No, sir.
All right. So let's go and take a look at some of these US pairs ahead of the data that's due out. The pound New Zealand was a nice one. I didn't expect it to move that fast with the CPI, but it did. So that's always good. So overall, okay, we can see where our Aussie dollar is. Okay, we've come from a weekly perspective, made a nice run to the upside, and then here, right, short. So when you do your top-down analysis, even if you didn't have a fib on your chart, okay, and you run into a key area, possible U-turn point, structure, has support becoming future resistance. When you see something like this, especially on your weekly chart here, you guys see that nice bearish candle right here, right? That's a good sign that this has a strong possibility of heading down, right? Of heading down. Okay. So if you like those long swing trade setups, right? Trading small, dripping trades in, when you're navigating, you're going through your charts and you see something like this, because that's an entire week, right? That's an entire week. That's pretty strong price action to the downside. You can see you have some indecision, the retesting of that candle, but you see the bulls could never take control and push back up above this bearish price action. And then we're short to the downside. Okay. So here is this latest move off the C, right? Off that weekly C. And we're just moving down. Okay. We're just moving down for right now. Right. So I ran a fib off that. We got overextended. We should be good here now though. No. We need this day to close out. You'll have a new low on the daily. You'll have a new swing low. But we need that candle to close out. But if we come to the 4, you can see where we are. Okay. So this move to the downside just ahead of the data. You can see we had a consolidation and a breakout to the downside. And you can see we consolidated here and we've broken back up above the 66.29 level. Pretty strong bullish candlestick there on the 4. And now, which we could pretty much expect, we're moving sideways ahead of the data. Okay. So we're expecting for the CPI to fall, right? If it falls, right now, it's going to be a series of things that they look at the different sectors, right? They're going to break it all apart, digest it. If it falls, especially more than expected, then you could possibly see your commodities, right? And see the stock market rally, right? See the stock market rally. Not sure how aggressive it'll be, overall, what happened with the banks and everything, but maybe you get a rally in a sense because, hey, the Feds may hold interest rates, not even raise interest rates at all, definitely not 50 basis points. If you get a CPI report where the data shows that inflation is slowing, especially, like I said, if it's better than expected. Okay, everybody follow me on that. Drop me a 1 in the chat. Okay, all right. So it's one thing to see the technicals, It's another thing to understand what the fundamental driver could be, right? That'll push price in one direction or the other. Okay, but this is where we are on the 4-hour on the Aussie dollar right now. So overall, it's been bearish. It's just a matter of, do we get a rally in commodities in the stock market as a result of CPI and the data that comes out that could push this to a high price, right? That could push it to a high price, all right? Because think about it. Maybe you get that rally, but we're still not out of the woods yet, right? We're still not out of the woods because at the same time, right, you still have, when you talk about, overall global growth, you've got some tightening going on, right? We saw the data coming out of the UK in regards to the wage growth slows, right, as expected. All right, so we'll continue to keep an eye on it. But hey, what could cause that correction, that B to C move to push it to a high price? It could be the CPI data today. All we could do is wait and see. Can't predict. Any questions on the Aussie dollar? Nope.
No, sir.
All right, let's take a look at the euro dollar. Hey, we're expecting 50 basis points out of the ECB. Banks are failing though. Few of them kick the bucket, right? So does that change the ECB's outlook? And what is that? That is coming up, what, Ryan? Thursday, I believe.
I believe so.
Thursday.
Yes, 9:15.
9:15. So before this weekend, before last Friday, 50 basis points, looking at multiple 50 basis point hikes coming out of the ECB. But we shall see, right? Kind of when you have those crazy occurrences that happen with the bank, happened with the bank last week, multiple banks, that's kind of up in the air, right? So we'll continue to watch and see what happens. Of course, the Euro USD could be affected today by the report that comes out. Right now, right, when you look at a daily time frame, you can see that we've got a correction. We've double bottomed at a 61.8, and we've had a rally to the upside when it comes to the euro versus the dollar. Okay, so just the DXY in reverse, pretty much. All right, when you look at the euro dollar, we can see that we've taken out a high here, right, of resistance. We've actually tried to retest it. All right, so this is your previous level. Broke it. All right, had a little retest there, and we'll see what happens with the CPI report that comes out. Okay. There. This is where we are on the 4. Right, there's that level again. So if we bring that back down, so here we are. Okay. See how things play out. Don't try to guess the market. Okay. Don't try to guess the market with this CPI data. Here we are on the 1. All right. Here's the move to the upside. 80-20 potentially, right? We're in that area. Could it collapse? Yes. Right? Because here's the thing, right? We think, hey, CPI data comes in, and the inflation is coming down more than expected, right? Even right on target, right? Coming down, right? We expect it to come down. But what does that mean for the euro, right? In regards to their central bank seeing that data, expecting 50 basis points on Thursday. hey, things seem to be cooling in the United States. Do we want to get too far ahead of ourselves in regards to an aggressive 50 basis point hike? We got a few banks that have failed. The global impact of that is being felt right now. So even though we may see that CPI data come down and you think, okay, dollar down because there's less of a chance that the US Fed hikes rates, we may automatically think euro up, right? It's euro USD goes bullish, but not necessarily, right? So we have to wait to see what's going on. This is why we don't trade the news. Okay. We don't trade the news, right? We don't want to turn our accounts into a slot machine. All right. So this is where we are on the euro USD right now. So just having a look at it. Let's see what the reaction is, and then we can set our trade plans up after that. Everybody hear me loud and clear. Please drop me a 3 in the chat. Let me know that we understand what we're saying here. Okay. You all are pros. Okay. And as a great manager of money, your first job is to preserve capital. That's number one. Right? Just like when you have the central bank and they say our number one goal is price stability. Okay? So inflation is key. As a manager, hey, you want to preserve capital. And if you're out the game and you're sitting on the sideline, guess what? You can't lose any money. All right? You can't lose any money. So just be patient. So that's the euro USD. Let's go through, take a look at the pound dollar. All righty. So here we are. So, hey, we've gotten a bullish move as of late, right, to the upside. Okay. We broke through 121.46, and now we're just hovering there, right, with the test of that level. Okay. Beautiful swing to the upside. Now we're testing that level. Okay. If we come down to the 4, here's that swing. Here's that swing. Here's our 4-hour chart. Okay. Here's the longer term run that it made to the upside, and we've just been ranging and consolidating. So here's the question. On the data, does it push price back below 121.46? We look to set up a plan from there, right? The plan could be, hey, it collapses, it moves to the downside. Okay. We've never gotten a 382 on this fib. It's just been dancing around. It's made some really good impulsive moves, right? The initial move out of that 127 was over 500 pips, right? We pushed up again, reacted at that 127, over 600 pips. Okay. Now we pushed up again. We've taken some highs out, right? We've taken some highs out, but there's no way of really knowing. We have to wait. Okay. Patience is action. Okay. Always understand that. Patience is action. And no position is a position, indeed. Okay. Sometimes we have to remain neutral and wait for things to play out, especially as swing traders. Okay. All right. So that's where we are in regards to this pound dollar. So we've got a decent impulse leg that's moved up, and this is what it looks like on the 1. Let me zoom it in. Okay. All right. Long-term crown possibility? Maybe. Right. Maybe. Maybe we eventually crown, depending on how things play out. Close that out. Move this out of the way. Can't got this preparing live stream blocking my screen, so can't really see what I'm selecting. So here we go. All right. So maybe right, in the future? Okay. We just don't know. We have to wait. All right, so that's where we are on the pound dollar. Any questions?
No, sir.
All right. Let's go take a look at the NZD USD. So here we are, right? Kind of just moving back and forth. So this is what's going on a weekly, right? Weekly basis, right? Bearish, bullish, right? It's trying to make up his mind this week. We've gotten some bullish momentum, mainly on the heels of that dollar correction. Okay. So you can see how this is just, man, it's just doing the dance. Okay. It's just doing the dance all over the place. So we need a catalyst, right? So we've broken below the cloud on the daily, right? And we've moved back up. We tested that 62, 68 level. Okay. And right now we're kind of neutral, right? Heading into the CPI data. Okay. So we'll wait and see. Okay. So let's look at what's been going on. Right. I don't even think I brought my fib on this, and I got it on the lower time. Okay. So this is where we are. We need to wait. Yeah. Little head and shoulders type of price action there pattern, but we don't know, right? We just don't know ahead of the data. Okay. So we'll see. So if we go down though, right, to the one where we were looking at some things, right? We're looking at a potential, right, of a pullback, and you can see it just continued up in the zone bullish. Okay. So this has been fairly indecisive. So let's just wait. Any questions on the NZD USD?
No, sir.
Sir. All right. Market's kind of just moving back and forth. We'll get the breakouts. Stay patient. Dollar CAD. Uh-oh. Think I might have to delete this one, right?
Control. Oh, dang. You did freeze on.
Okay. Hold on, everybody. Let's fire it back up. Okay, it's working for me now. So here we are on a weekly, right? Just that last run up. Okay. We've broken above 137.09, right? We're currently testing, right, that level. So we move down through the charts. Okay. You see that it has been moving bullish, right? We know the CAD, oil prices declining, right? So if we go over, let's take a look at crude oil, right? Why do we look at crude oil with Canada? It's the #1 commodity, right? For Canada. So if we take a look at crude oil, look at the report, WTI futures fell 2% to around $73 a barrel on Tuesday, closing in on the lowest level since December 12th and extending a 2.5% loss in the previous session as the collapse of Silicon Valley Bank raised concerns about a broader financial and economic crisis, triggering a sell-off in risk assets, right? So if we have a sell-off in risk assets, right, you're primarily risk off, okay? Investors are also geared up for the key U.S. inflation data, which will be among the last major economic reports that the Federal Reserve will consider before next week's policy meeting. Okay? But meanwhile, hopes for a recovery in Chinese demand and a weaker dollar kept the floor under prices. Now, investors expect China's oil imports to hit a record high in 2023. So this is long-term for oil amid growing demand for transportation fuel and as new refineries come online. Traders look ahead to OPEC's monthly market report on Tuesday and a similar report from the IEA on Wednesday for a snapshot of the outlook for supply and demand, right? So long-term, they expect eventually a pickup in demand, right? Based on China's recovery and overall demand projections. But right now, right, it's finding that seems to be wanting to find that low price, right? So when we look at Canada, in regards to their monetary policy, putting a pause, right, at their last meeting on interest rates. So you've had an uptick, right, when you look at the dollar CAD. Now we've got this correction because of the dollar weakness that occurred. But overall, this has been bullish. So today will be interesting. Here we are on the 4. There's that correction. So we're still sitting above the cloud, just ahead of the report. 4 hour stochastic is in the buy zone. Let's see what happens. All right, let's see what happens on the UK. Okay. Questions on the dollar CAD?
No, sir.
So,
Benny, I was looking
yes,
at how you taught the using the investing.com, and for the dollar CAD, it's saying on the higher time frame it's a strong buy, but the lower time frames is a sell. So
correct. Yep, that makes sense, right? We see this correction,
Yeah.
right? So your higher time frame is a buy, right? So that tells us, right? That tells me, like, before I get on the charts, is hey, I'm possibly in a up retracement zone. All right, so we're buying on the higher time frames overall long, but we've been selling on the lower time frames because look, that's a nice run, right? Out of that 118 zone back down, that's over 150 pips. So that indicator is going to say that that's selling off. It's a great observation. Way to use that investing.com. Really helps as extra confirmation, eh?
for sure.
Yep. Especially for those swing trades. So that's where we are. Okay, so that's falling right in line. So let's see what happens. Let's see what happens with the data. And then we'll take a look at this dollar Swiss. Okay. Right. This is where we are on the weekly, testing the lows. Okay, so let's zoom this out. Okay. I'd say that's a critical area. Right. So this is what I'm going to be watching closely, right, as that data comes out. We're testing these lows again. Okay, so let's zoom out and see. Choppy mess, this dollar Swissy. Okay. But this could potentially be a really good bottom. Right, here we are. Okay. So let's see what occurs. We don't have to try to guess the trade. If it pushes down impulsively, guess what? It's going to eventually correct to the upside and then move back down. So we can wait for our sweet spots, right, to be hit in relation to our fibs and our Fibonacci sequence. So like let me pull this off here. Come to the 4, right? And so this is a good one to focus on, right? Right, this fib. Okay. So here we are at these levels. Right. So let's see what happens, right, with the price action. Major lows we're testing here. Here's a D extension on this capital fib. All right. So this is one to watch, one that you can build a trade plan around. Okay. Any questions on the dollar Swiss? No. All right, let's take a look at this dollar yen.
Benny, the 4-hour outlook from your perspective is the better outlook because of the news coming up, or?
Yeah, and it's just a super clean look. You're talking about on the dollar Swiss.
Yeah, or just in general for the dollar pair since we have news
Yeah.
to look at it in the higher time frame and then, okay.
Mm-hmm. Mm-hmm. And I'm gonna be honest. The good, the smaller time frames get you in and out of trades, but when you look at like overall swing trading, the 4-hour chart is awesome, right? Like it's a good. It gives you really nice clean moves. It gives you a really great picture, especially coming down from the daily. Uh, it's to me, it's a great chart. A great chart for swing trading. You could just it gives you Joyce said she loves the 4. So it gives you like I say, clean moves. You can kind of just let it develop. Like you can see here, this high price here. So if I'm overall bearish, like it came right into these levels, nice and clean. Right. When you get to the 1 hour and lower, things can get a little hectic because of the price action. Right. You're looking at hour candles, 15-minute candles, 5-minute candles. Some people have a passion, right? For trading the 15 to 5 and day trading, like to be in and out of trades. But when you look at like this here, this is just a clean move there. Right. This is just beautiful. But you just have to be, you have to be patient and you have to wait. Right. But you can look to, that wants to continue bearish, right, to the downside. You could add to the position. You can even use then your if you want to, like your 1 hour chart to add to the position. So you trade a lot smaller because the overall move is longer. Like for here, if and of course you're going to take less trades overall. Because it's going to take longer for them to play out the fibs. But right, so this here is the stop above the A. Okay, your projected D extension is here. Okay, so when you look at that price action around that right, that zone, right, like that. That's a pretty clean play, right? And then you're just letting that. It's gonna do its thing. But if my trade idea is right, my overall directional bias is right, that's gonna shape up to be a really nice trade. You know what I'm saying, guys? Like this is hey, manage my risk, right? Take my risk divided by my stop loss. It's 170 pips. And then we've got 433 pips to the downside. Right. So that ends up pretty good. Ends up pretty good. Not quite 3, like 2.5. Right. That's that level right around the 50. But you could do a lot with that setup. I know. Hey, I'm still working, Carolyn. It is less choppy. It really is. Even for a choppy pair like the dollar Swiss, right? You see, right? So that's a great observation. I'm still after all these years working on my patience. You know, and one of the things that drive Ryan and I crazy is we look back and we're like, are you still in that trade? No, I'm not. I'm not in that trade. Well, why aren't we still in this trade? Right. When we look back after weeks, like what? Like what are we doing? Like what are we doing? You know, but that's always a work in in progress. That's always a work in progress. And, 1% is 1%, 2% is 2%, right? When you're swinging, you're not really worried about how long it's going to take. This is your trade idea. It's a beautiful thing, but it is something that takes time to master. But when you use the Fibonacci sequence to set you up, look at what it's doing, everybody. It's telling you, helping you with your overall direction, where to get in and where to get out. If you're wrong, the price action is going to tell you you're wrong. Right? It's going to tell you you're wrong. That's why you have a stop. But this is playing out. Sounds like the beginning of your that Euro GBP. Right? So that's one of the things that you have to think about. Like it really can set you up nice, but it does require a lot of patience in regards to waiting on a setup to occur. And then it takes patience once you're in the setup to let it run. Okay. So just some things to think about. Let's take a look at the but that's why we say, you trade small, you drip your trades in and you accumulate positions because you don't want to be over leveraged, right? In one of these type of setups. And because you're over leveraged, you tie your whole account up. Right? There's an opportunity cost to that, to being over leveraged in a position. Right? Because now I can't move on and take advantage of other opportunities that may be going in my direction a lot faster. Right? I can't get in it because my account's tied up. So think about that. Okay? So let's take a look at this this dollar yen. We got a little bit of everything going on with this dollar yen, right? So we know where the BOJ stands in regards to their monetary policy, despite new leadership coming in here soon. But this is the 1 hour, right? Where we can see just a little while where it peaked out here, right? See how we tapped that extension on the weekly, right? And we've been coming down ever since. Okay. So you got a potential crown formation there. So we're right there at that right tip. So we'll see if we get further declines on that. All right. Further declines. So we've climbed up, but now, right, kind of hard to tell. Right. So when you look at it here, how this is going to play out. Right. So I got a little bit of everything going on. Right? So we know we got the potential, right, for this crown formation. Right. So what I've been doing is tracking this move to the upside with that dollar bullishness. But we may be getting, right, eventually to a zone where we can reverse. Right. So this data that comes out can help us in regards to which way this is ultimately want to go, whether it's going to make a further upside move, right, to push higher into this zone, which will get us around an equal right tip, right? Or if it's going to turn over now, right? Kind of hard to tell. Kind of hard to tell with the dollar correcting. The bank news kind of threw a wrench in at everything. Right. So we'll have to see. Now, if this is going to turn over and move to the downside, it's going to take that A out. It's going to make a pullback and continue down. Right. So either way, we're set up to where we could take advantage of the moves. But that's what it looks like right now. At least that's how I have it. So we'll see how it goes. Right. Here's that 4 hour move. You all remember this? This is what I mean. Like they take time. But you see, we almost got that TP2 there. Right. Data's going to determine whether or not that's going to turn over and push further down, or if we're going to move up, just like what we saw in a higher time frame. Isn't that amazing? Okay. Didn't hit that extension, turned over. Okay, so out of that zone, it's over 300 pips. Joy. It's weird. It's weird how this stuff happens and the timing of it. You know, Ryan talk about it all the time. All right, so that's where we are. Wait and see mode. We always say we need a catalyst. All right, we've had a lot of events that have occurred in a short period of time. So it's best to just wait to see what type of breakouts we can get. Any questions before we wrap things up for this morning session?
Nope, nope.
Nope. All right, let's be patient, everybody. Ryan, anything to add before we wrap things up?
No, sir. Great session, bro.
Appreciate it. Well, 8:30 is just around the corner, everybody. Let's keep an eye on what happens, right, with the fundamental data and the price action. You're welcome, Ryan, aka Mr. O. Appreciate you all being here this morning, right? Packing the place out. We will see you all this evening, 9 p.m. Eastern Standard Time for the Asian session with my awesome partner, Mr. Ryan Carthage, and he'll be going over all of the day's events. Have a good day, everybody.
Have a good day.
Thank you.